Daily bias is one of the most important concepts when it comes to trading, as you're forming a bias for how you enter the marketplace and what you anticipate from that marketplace. It removes you of many psychological barriers and keeps your trading simple, making your path to profitability much easier. But if you're like me in the beginning, you struggled learning daily bias, watching video after video, not yet truly grasping the concept like you wanted to, despite trying. No worries, I have done all the hard work for you through thousands of hours backtesting these markets day in and day out. On a daily basis, I have cracked the code. And in this video, I will be sharing the 4-step process that I look for on a daily basis when it comes to forming a bias. First step to simplifying daily bias is time. And the first rule of time is our session or our kill zones, which we have the Asia session between market open at 6 p.m. EST to 12 a.m. EST, London session between 2 a.m. EST to 5 a.m. EST, New York session between 7 a.m. EST to 11 a.m. EST, and last but not least, London close between 11 a.m. EST to market close 5 p.m. EST. Between these time ranges should be the only time you should be trading, specifically during London session, New York session, and London close. We'll talk about this a little more later. Another good tip that I use when forming my daily bias is cyclical lines to separate my days every single day at 12 a.m. EST, starting from the prior 5 weeks till this week. So we have our cyclical lines here, and this is the Monday 5 weeks prior at 12 a.m. EST, and then we'll extend it out until Tuesday 12 a.m. EST, and it extends out 5 weeks prior to this week. Think of daily bias in 3 steps. Where has the market been? Where is it at currently? And where is it going? You're not predicting the market except using context clues to see where has the market been from the prior days and prior weeks, and where you anticipate to go next from that data given. Every start of a new week, you want to move the cyclical lines 1 week ahead. This 5-week period will be your bird's eye view of the marketplace, and you want to focus inside of this 5-week period for where the market has been and where it's likely to go next. Second step is order flow, understanding market structure within inside the marketplace to determine the overall direction that the market is seeking at that current time. I like to use the 1 hour time frame for my frame of reference for drawing out my higher highs, my higher lows, vice versa for lower highs and lower lows, as well as a break in market structure will be much more impactful on the higher time frames than the lower time frames. So I'm also looking at the current trend of the marketplace, and if we have not yet broken structure on those higher time frames, then I will continue to look for that same narrative for higher or lower prices until my objective is then met. So as we can see in this depiction, from those prior 5-week periods, we have been making lower and lower and lower prices until we have reached down here into this level, to which the market has then seen a sudden shift higher. That marketplace has now seen a shift higher, and we went from lower prices to now higher prices, meaning that if I'm going to enter the marketplace, I will most likely want to be on the sides of the current market structure. When we're trading, we want to understand what is the current trend, what is the current order flow that is being respected inside of the marketplace, and trade according to that order flow. This will keep you from taking bad trades. This will keep you from, analysis paralysis of where the market is going, because you're trading along with the trend. So we can clearly see during this day that the prior day we made this higher high. The day before that we made this higher high, seeking higher prices. So coming into the marketplace, I want to anticipate a pullback into this level during that London session to then create that low for us to then see that continuation to the upside, trading along with the trend, because as long as the higher time frame trend is supporting bullish prices, I will continue to be a bull. The third step for simplifying bias is daily profilings. We're looking at the daily candlestick here, and we're going to dissect the anatomy of this candlestick and how the daily candlestick forms. So as we can see here, we open up during Asia session, we create the high of this bearish candlestick after creating that high, we then see the drop lower, see the slight pullback, see that continuation lower, slight pullback once again, continuation lower, all the way until we reach down into our objective, where then the candlestick comes back into that daily range and we close right here. This is how a daily candlestick forms. We open up, create this high, and then we drop all the way down into our objective, and then we close back into that daily range. Now we have the anatomy of the daily candlestick. Let's simplify it even more. The Asia session usually will be the consolidation. London session typically creates the high or low. New York session will usually be the continuation of London session, or sometimes the reversal of London session if our target has been met, as London close is typically the continuation of whatever New York session has done, or the reversal from New York session if our target has then been met. So whichever session you are trading, these will be your parameters. London session will be anticipating a reversal to take place most of the time. So during London session, it's about marking out where is the most likely area of either support or resistance to then create that low or high. During New York, your opportunity is to verify London creating that low or high and where is the objective next. If we have liquidity above us that we have not met, we can anticipate a continuation higher, reach up into that liquidity pool for that New York continuation. But if we have already met that objective during the New York session, we're starting to break from it, then that's when we can anticipate the New York reversal. And for the London close, it's typically a continuation of whatever New York session has done until that objective is then met, or a reversal if that objective has already then been met. So coming into this depiction here, we can clearly see that London session, we came higher up into this last up close candle known as this bearish order block or this supply zone, whichever you want to qualify. And then we seen it drop lower, breaking structure at downside from this level. So we can clarify here by this circle that we have established a high of day during that London session. Now coming into New York, we have established that high of day during London session. We want to anticipate a pullback known as a New York retracement for that continuation of whatever the London session has then did. So we can clearly see London session came up higher, created this high, then seen this massive drop to the downside. So coming into the New York session, I want to anticipate a retracement into an inefficiency for that continuation. And as you can see here, we retraced into this bearish fair value gap, and then we've seen that drop to the downside for that continuation. Then coming into London close, we want to know, have we met our objective yet, or have we not met our objective yet? In this case, our objective is this sell side liquidity for the day. We have not met that area yet. So London close, we see this pullback inside of this bearish order block, which we can then take a short until we reach down into that sell side liquidity, and then we're done for the day. That would then be the London session, the New York session, and the London close, and then we pull back into the daily range to close off the day. And that would then how be a daily candlestick forms. Now looking at a bullish candlestick, we can see that Asia session has created this consolidation, pushing us lower. Coming into the London session, when we create the low of day, taking out the Asia session lows as well as these prior daily lows, and then immediately seeing this push to the upside. So we can establish that London session has created this low, and we have our objective, which is this buy side liquidity. We have not yet met up into that objective, so coming into New York session, we want to see that continuation higher until we reached up into that objective, which we can see coming into the New York session. We find support at this bullish fair value gap, which then pushes us higher. And then coming into London close, we see us reach up into that buy side liquidity off of this bullish order block. and then we see this drop to the downside, ending the daily candlestick. So now that you guys seen the bearish candlestick formation as well as a bullish candlestick formation, these are the principles that you want to look for every single day, whether you're trading the London session, New York session, or London close, to then forming a bias, using those prior sessions, those prior days as a means of context for where you anticipate the market to go next. Last step but not least is draw on liquidity. The marketplace seeks two things: liquidity and inefficiency. So as we're coming into the marketplace, we want to mark out any PD arrays where we can expect either a reversal to take place or a continuation of a prior move, as well as support or resistance levels where you can anticipate the market to reach into. And second is liquidity. And for liquidity, we expect either a reversal after that liquidity pool has then been swept, as well as a level, either old highs or old lows, where the market is reaching into. We've already marked out the structure, which was we are seeking higher prices. We've marked out our ASIS session, London, New York, and London close. We're coming into the London session. We're anticipating this to be a bullish day based off of the bullish order flow, right? So we're anticipating a pullback during London session to create that low for us to then seek higher prices during New York and eventually London close until we can reach up into our draw on liquidity. So our draw on liquidity is these highs. This buy side liquidity or these prior weekly highs is a great area of targeting when we can anticipate the market to reach up into. So coming into the London session, I want to see a pullback. Where is the most likely area that the marketplace will hold when we do get a pullback? We see we have this last down close candle in the formation of a bullish order block. So coming into the London session, I either want to take a short down into this bullish order block, or I want to wait and be patient for price to come down into this order block to then find longs and continue on those longs for that daily range expansion up into this level. Either you're scalping, which is taking the short down into this level, or you're holding it as a day trade throughout that trading day until we reach up into our objective. Let's go on a lower time frame here, like the M15 time frame. So we can clearly identify that 1 hour order block we were just talking about, and we're anticipating price action to see a drop lower into that level, find support to then reach up into that buy side liquidity we were just then talking about. So when forming that bias on the London session, this is exactly what I'd be looking for and what you guys should be looking for as well. So let's see how this then plays out. We can see that we have reached down into that bullish order block after coming higher and reacting off of this last up close candle. So we came up into this last up close candle, found that rejection, and you could have taken a scalp short from this bearish order block down here into this bullish order block. Or what you could do in my case would take a long here inside this bullish order block, stop loss below the lows, targeting back up here up into those London highs. This would then be my trade idea for the London session. My narrative and my structure of the marketplace is higher prices. We're at a level of support. I'm trusting this level of support to hold and recreate that low during the London session. Let's see how this then plays out. Price eventually reaches all the way back up here into my target for a 2-to-1 R. This is why it's important to put your stop loss below that order block. So we can be confident here that we have created the low during the London session, and we still have our objective, which is this buy side liquidity. So coming into the New York session, seeing that we've established that low during London, I'd want to then be confident in anticipating a retracement during New York session for that continuation to the upside until that target is then met. Coming into the New York session, we can identify this bullish breaker as a level of support to hold in price action. What makes this a breaker? We have this low, high, lower low, which took out this previous low. So as price comes back up into this high, this is a level of support to then hold. So I'm trusting this level of support to hold because order flow is bullish until we reach up into that objective. So I'm going to take a long here, stop loss just below that breaker level, with my take profit back up here into that buy side liquidity for that New York retracement, because we've already established London creating that low. So we're anticipating the continuation during the New York session. Let's see how this then plays out. We hold inside of that order block and price eventually reaches up into our level. Okay, now we're getting into the London close. We've already met our objective for the day. I'm anticipating a reversal that didn't take place into the London close because we've already met our objective and we've established that high. Let's see how the London close plays out. So coming into the London close here, we can identify that London session had created this low, which then pushed us higher. New York gave that retracement we were looking for all the way back up into our objective, and after that objective has then been met, we gave this steep pullback, basically shifting structure from higher prices to now lower prices. Now we're anticipating a pullback into a level of resistance to then take out the opposing liquidity pool for this session. As we can identify, we have those London lows as a liquidity pool that we would most likely reach down into, and for a level that we want to see it retrace into is this bearish breaker. Just like we had that bullish breaker, we have this bearish breaker. We have this high, low, higher high. As price breaks through this low, this last low will then be a form of resistance. So we could put a limit order here at this bearish breaker, stop loss up here, and we can target these lows for about a 1-to-1R during the London close. Let's see how this then plays out. Price comes up, taps us into that bearish breaker, and then eventually reaches down into our target for that liquidity pool. And let's see how it closes out back into that range. So this would then be how you would form a bias for London session, New York session, and eventually London close. First, we establish time, having that bird's eye view to look back into the marketplace, where it has been, where it's at now, and where it's going next. Second, we establish order flow or market structure inside of the marketplace, understanding the underlying trend of where the marketplace is seeking. Third, we looked at the daily profilings and analyzed the anatomy of that daily time frame. Fourth, we identified the draw on liquidity. Where is the marketplace seeking? Where is it most likely to react off of? Which PD array, which liquidity pool, identifying those inside of the marketplace. And then last, we put it all together, and this is how we can form a bias and call the markets on a daily basis. Hopefully you guys learned a lot from this video. If you guys have not already, make sure you guys like this video, comment on what you guys want to see next, subscribe, as well as follow me on Instagram at Arkhamtrades if you guys have not already. I'm Arkham. Be safe. I have released my private mentorship where I give daily lessons on technical analysis, fundamental analysis, psychology, risk management, as well as live trading and much more for your trading success. If that's something you guys wish to check out and want even more content and gems from me not shared anywhere else, it will be the first link in the description or the first link in my Instagram bio if you wish to follow me on there as well at Arkhamtrades. Thank you for watching.